Okay, so right now we finally have platinum prices trading back below 900 US dollars per ounce. As you can imagine, at the Gold and Silver Club, we are taking the opportunity here to start adding to our position. Now, at the start of the week, oil prices, they broke above 82 US dollars per barrel. This, in fact, enabled us to bank just another 900 points profit on one of our highest oil trades there. As you know, every one lot contract that you would be trading, that's $9,000 of profit. Every 10 lot contract you'd be trading, that's $90,000 of profit. Now, as we mentioned to you last week, we have had a record-breaking year here at the Gold and Silver Club. As you may tell from my voice, I've been speaking a lot. It's been back-to-back huge opportunities to capitalize here on Commodities Citadel. They posted their commodity profits over the last year, over $4 billion of profit. The commodity markets are just getting started. It's been absolutely immense start to the year. We've not even hit the second quarter yet, but already many of our clients at the Gold and Silver Club, they've made more money in the first 2.5 months of the year than over 2023. It's been that profitable over this year. As I mentioned, 53 back-to-back winning positions there on the portfolio. We haven't had any stop outs in 2024. Now, many of you may question that, but our clients do watch all of our videos here. Of course, they are all very aware of the statistics here on the portfolio, and we've been talking you through and telegraphing what we're doing in the markets as well. This comes back to my point. Right now, we've been very patient with platinum, so we have finally seen it dip back below $900 per ounce. As I talked you through the previous week on breakouts to the upside, I would use that as exit liquidity. So we kept on banking profit on Palladium when it broke out to $1,100 per ounce. That put our lowest trade up over 2,000 points. We've done the same on platinum with a breakout to $950 per ounce just on Friday. It's only taken 2 sessions for platinum to break all the way back down below $900 per ounce. So if you're patient, you can take advantage of these opportunities in the market. Right now as well, Palladium has now got back below $1,100 per ounce. So very much of interest now. I'm looking for lower prices on Palladium here. Going back to February, we saw platinum and palladium prices, they reach parity. So I don't think it's going to be that long until we have big opportunities here on palladium as well. So as you know, with oil, we've taken the opportunity on the breakouts to the upside to keep scaling out a profit. Now, oil is starting to pull back a little bit. It's back at 81 US dollars per barrel. But of course, we're not being complacent. We're locking in profits the whole way along. My only concern with oil right now is that now we've seen 85% of hedge funds and money managers have flipped long. It's been the same on gold. Gold, these hedge funds and money managers, they weren't buying oil at the swing lows when it was back at $70 and $75 per barrel. Instead, they've FOMO'd at the top using trend trading strategies to buy right at the highest prices of 2024. It's been the same on gold. Hedge funds and money managers, they weren't buying gold when we were back sub $2,000 per ounce. Instead, they're all buying at $2,150 back towards the previous all-time record highs. In fact, many of them actually bought much higher at $2,170, $2,180 US dollars per ounce. So it wouldn't be a massive surprise here to see a bit of a pullback across gold and oil, flush out some of the recent buyers that have FOMO'd in right at the top before we get going for the next leg higher as we transition into April. Now, also be aware that on Wednesday we have the FOMC statement. So what I typically tend to do here is I use that for exit liquidity. So any big breakouts that we may get off the back of the FOMC statement, I'll use that to bank further profit in the portfolio. If for argument's sake we get big sell-offs, particularly platinum and palladium, absolutely I'm looking to reload at lower prices. That's the game plan as it stands at the moment. Again, my voice is a bit hoarse at the moment. I've been speaking a lot, so bear with me. But again, if you would like to learn the professional research-driven approach to the market, this is where you definitely want to ditch those outdated technical analysis strategies. The challenge with technical analysis is that it's the first thing that everybody is taught in the markets. It's extremely basics. You need to graduate beyond this preschool elementary understanding of the market. What does that look like? Well, you want to add in data, statistics, market intelligence. Further compound that with understanding and learning the capital flows in the market. So what the banks, the hedge funds, the institutions, what they're doing in real time, this will help you massively. Further compound that as well with the intermarket correlations, the ratios in the market, then of course the macros, the fundamentals, and the geopolitics. All of this will help you massively then understanding and learning the daily, weekly, monthly and quarterly real-time data-driven cycle for each commodity. This is all going to help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the professional research-driven approach to the market and join our professional mentorship program, there is an opportunity for you to do so. Just make sure you click in the link below today's report in order to make an application to join our professional mentorship program.